The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. TGIF. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. It's the number to use if you want to give me a call, talk about this market. My show airs every day on TFNN from 3 to 4 Eastern. It's available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi right in your smartphone browser. You listen to the stream 24/7. And if you're at your PC, don't forget about Tiger TV. On the homepage of TFNN.com, the show is carried live on Channel 1. It is archived on Channel 13. Tiger TV is also viewable on your handheld device. All you have to do is, once again, open that smartphone browser, type in TFNN.com. Over on the top right-hand side, you'll see a box with some cell phones in there. Click the box, and Tiger TV will start streaming on your phone. All right, looky here. We've got a nice little rebound for the major averages as we head into the close. A little less than 1 hour left to go in Friday's session. Indices up near session highs. We've got the Dow up 107 points. 0.8% gain for the blue chip index to 13,988. 13,988, the last for the Dow. Take a look at the S&P 500. It is up right at its session high, up close to 11 points, 0.7% to 1513, and the NASDAQ Composite. Really all indices right around the same percentage gains at this point. NASDAQ Composite also up about 0.7%, 0.8%, 23.5 point gain to 3155. So you had pretty stiff institutional selling in the market earlier this week on Wednesday. You had another day of institutional selling on Thursday. And then what do you have today? Not surprisingly, you've got a low volume gain. So really hard to put a lot of faith into a rally like today when you just don't have any conviction behind the buying. And yeah, it is Friday, and maybe some people are left to go home early, but right now volume on the NASDAQ is tracking 25% lower than what we saw yesterday, which was 1.94 billion shares on the NASDAQ. Let me double check that. I don't know if I actually updated that. Let me just take a look here. NASDAQ volume. Yeah, I didn't. It didn't look right. Yesterday we had almost 2.02, just over 2 billion shares trade on the NASDAQ yesterday. Either way, we are tracking about 25% lower than that on the NASDAQ today. Volume yesterday on the New York Stock Exchange above average, about 811 million shares. We are tracking about 20% lower than that today. So nice day for the market, but you've got very heavy volume selling on Wednesday and Thursday and low volume gain on Friday. So it really doesn't do much to mitigate the selling that we saw earlier in the week. This still looks like a market that is ready to consolidate. You really can't put anything past the market at this point. On the one hand, you can't get too bearish, even though professional selling, institutional selling is certainly making its presence felt in the market here. You had tremendous weakness in the housing stocks yesterday, and overall, I think the odds are pretty good for more price weakness here. But when you look at the NASDAQ Composite, it is still holding above its 50-day moving average, so that is the key support level right now, and the same holds true for the Dow, S&P 500, New York Stock Exchange Composite Index. There has not been a break below key support for any of the major averages at this point. Now, there are some leading stocks out there that are in some trouble, it looks like, which I think is another yellow flag, but we just kind of have to take things on a day-by-day basis. As far as the Ultimate Growth Stocks model portfolio, my newsletter, we've definitely been trimming, taking money off the table here. Recommending that investors, favor some cash here, kind of get out of the market's way, a preemptive strike. Nothing wrong with taking some partial profits here, maybe even full profits in other cases. So we're still holding on to 3 stocks in the newsletter. And we'll see how that goes in coming days. But risk for more downside here, definitely. It's amazing that after a 14% move for the Nasdaq Composite and S&P 500 since the mid-November lows, we've only come in about 2 to 3% off the recent high. So a 14% move, a 2 to 3% pullback. That's usually not enough to, consolidate gains and give stocks and the market a chance to catch its breath. So we will see how it plays out in coming days. U.S. dollar index today up just a hair, just a little tiny gain for the U.S. dollar index, up fractionally to 81.47 last on the U.S. dollar index. April gold down 2.3% for the week. It was under pressure again today, down $5.80 to $1,572.80 an ounce. We did have a couple of earnings reports in the gold space. Let's take a look at Newmont Mining, NEM. This is the largest U.S. gold producer. They have mines in North America, South America, Asia Pacific, Africa. They're all over the place. But largest U.S. gold producer for all of 2012. It produced a total of 5 million ounces of gold and 143 million pounds of copper. Its output in 2013 going to still be right around 5 million ounces of gold. Copper input expected to be a little bit higher. I think they said 150 million to 170 million pounds of copper. Earnings down 3% to $1.11. Sales down 10% to $2.48 billion. You can see Newmont Mining has been, gold in general has been really taking it on the chin. Resistance here for Newmont at the 50-day moving average, just like what has been happening in recent months for the GLD. But Newmont Mining, after early strength, is now only up 26 cents to 40.81. It hit an intraday high of 41.76. And another gold report here. El Dorado Gold, EGO. This is based in Vancouver, British Columbia. And El Dorado, let's see, they had flat earnings of 16 cents a share. Their sales were up 15% to $350 million. El Dorado, same situation as Newmont, reverses earlier gains and is now trading lower by 20 cents to $9.61 after hitting an intraday high of $10. Let's check in on the GLD. I don't know if you had a chance to see Tom O'Brien on CNBC. I think that was it 7:30 Eastern Time, 4:30 Pacific. Yeah, I was up at 4:30. I'm always up at 4:30. Heard Tom talk about the gold market. He sees more downside for gold. What was it? 14.25, 14.50 an ounce, something like that. Was his projection. But the GLD today down 12 cents to 152.49. April crude oil up 29 cents to finish at 93.13 a barrel, down 2.8% for the week. Another rough week for crude oil. A couple of interesting oil names popped up in my screens here. Again, very difficult finding stocks to buy here. Yeah, we're in a market that's under distribution. That's typically a very difficult tide to swim against. And then when you see stocks that are acting well, like a PBF Energy, it's very extended, and it's just it doesn't fit the buying parameters that I use. So this is a daily chart, so you can see it's been consolidating gains for about 2 weeks. It is outperforming nicely today, up 4.9% to 40.05. So another oil refiner here that has been performing really great, and it's a new issue as well. It came public in December at $26 a share, market cap of $3.9 billion. So PBF Energy, kind of a little-known but fairly liquid name in the refining space. The refiners as a group have been going gangbusters, but if you haven't heard of PBF Energy, maybe one to check out. And then in earnings, oil and gas producer Cabot Oil and Gas. Big move higher. Gap up for Cabot today, up 10.4%. Impressive move to 59.47. 59.47. Strong earnings is fueling the move today, and here this is a company that's got very good growth prospects this year and next. In 2012, they just reported their fourth quarter. They made 66 cents a share. They're expected to do $1.31 this year, which would be up 98%, and they're expected to do $2.57 in 2014, which would be up 96%. So talking big growth ahead for Cabot Oil and Gas, and maybe investors starting to realize that their sales growth accelerated nicely in the fourth quarter, up 38% from a year ago, and earnings growth also accelerated, up 35% from a year ago. So pretty nice earnings from Cabot Oil and Gas. The buy here, again, the breakout was back in January when it broke out over, say, $51, and at 59.47, you have a stock running higher and gapping up. It just looks a little extended, and don't like chasing extended stocks out there. Bond yields slightly lower today, not by much. 10-year note down to 1.97%. 30-year bond down to 3.15%. Financials bouncing back today. Let's take a look at the XLF. A lot of stocks had very rough days on Wednesday and Thursday. XLF not excluded from that company, but trading up near its session high, up 0.9% to 1768. In terms of individual names, asset manager BlackRock, BLK. It's a stock I'd love to own at some point, but this is just a stock that's way too extended. It's been running higher forever. A 2-day consolidation is not enough for me to say, okay, it's digested its gains properly. It formed a good base. It's time to buy. This needs to consolidate gains for several weeks, and I think if I'm expecting more market weakness here, not a full-blown correction of 10, 15, 20%, but just more of a pullback. We're only, again, about 2%, 3% off recent highs. Maybe we come down 5, 6%, something like that. That would give names like BlackRock time to come down to their 50-day moving average. For BlackRock, the 50-day line is at 224. It's trading at 240 right now. So another 16 points lower. Find support at that 50-day. Could be a good buying opportunity. But Goldman Sachs also bouncing back here, up 1.7% to 153.54. And so financials having a decent day today. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing, checking in on shares of Hewlett-Packard. Here's a stock that has bounced nicely off its lows of around $11.50 a share back in mid-November, and technically headed into earnings, it was still underneath its 200-day moving average, but a bullish gap up for the stock today. You'd have to call it a technical breakout here. Amazing. Hewlett-Packard up 13.4% today to 1939. Earnings and sales growth declined from a year ago, but was actually much better than expected. Earnings of 82 cents a share. Analysts were looking for 71 cents. That was down 11%. Sales were also lower from a year ago at $28.3 billion, but the estimate was $27.8 billion, so nicely ahead of expectations there as well. PC sales down 8% in the quarter, printer sales down 5%. There have been reports that HP's board is considering a breakup of the company, but CEO Meg Whitman has said there are no such plans. So bullish move for Hewlett-Packard today. Congratulations to longs. Solid day for the stock today. Other big movers today, we want to check in on Aruba Networks, a stock that had been under some selling pressure ahead of earnings, was actually not looking that healthy at all, but its earnings report surprised the market. Shares of Aruba Networks up almost just over 21%, $4.40 gain to $25.20. Nice breakout over 20. Aruba Networks provides network access solutions for mobile enterprises. Basically, the company's taking advantage of rising demand for equipment as more companies are providing wireless access to customers and employees. But earnings up 38% to 22 cents a share, 3 cents ahead of views. Sales up 23% to 155.4 million. That was about a little more than 3 million ahead of the consensus estimate. Lazard raised its price target on Aruba Networks to $30 a share. So bullish day there. All right, 877-927-6648. Going to take first call of the day. I think are we going to? I'm going to say British Columbia. Jay, how you doing?
I'm doing great.
Your name is Jay?
Me?
Yeah, I can hear you. Your name is Jay. Jay, okay.
First of all, Ken, I want to say that I run every day, and in British Columbia, we're a little bit, the time zone is different, but I listen to your show every day on my 5K run, and I always appreciate your opinions.
Wow, I appreciate that very much. I would imagine British Columbia is a beautiful place to run. Nice, clean air up there, and doing.
Yeah, it's stunning.
Yeah,
but running's hard, so it's always nice to have a good distraction.
Yeah, I have not been to British Columbia yet. I will at some point. I hear nothing but good things about it. So appreciate the comments. And what can I do for you today?
Well, I have two. I know that you did work for Investors Business Daily, and I try to follow their system. And I just was curious as to what your opinions would be on two different stocks as far as base counting. So the first one is Bloomin' Brands, ticker BLMN.
Okay. Yeah, we heard from Bloomin' Brands. They reported earnings. So let me go ahead and just when you're counting bases, you're going to obviously do that with a weekly chart.
Yeah.
And so in this case,
I'm looking at that one and thinking IPO. It went up and made a first stage base, and then popped out of that and has kind of been going sideways since before the big drop today.
Yeah, I think so, and
okay.
I would call this a stock that currently is working on a second stage base. There may be some people. I mean, you're correct. Bloomin' Brands did have its IPO last year. It came public at 11 in August, and there's some people that will look at a little. If you're on a weekly chart, you look at the tight consolidation there, where it came public, and then for the next 3 weeks, it just moved tightly and then broke out. Some people would call that a breakout from a first stage, and then would look at its most recent breakout as a second stage, but not to mince. I would call it, basically working on a second stage base here. And I'll tell you what, Jay, if you have time, you can hang on, because I've got another break coming up. We'll be back in about 3 minutes. You want to hang on the line?
Yes, I'll wait.
Okay, thanks. Appreciate it.
Thanks.
All right, talking to Jay in Vancouver, British Columbia. Has some questions about base counting, so we'll finish up the conversation when we come back. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Happy Friday to you all. Appreciate Jay from British Columbia hanging on the line there. We're going to finish up a conversation about Bloomin' Brands, and she also has a question about another stock. So, Jay, you're still there?
Yeah, I'm still here.
Okay, thanks for holding on. Now, so anything else on Bloomin' Brands? We're going to call this, a recent breakout from a first stage base and then kind of consolidating gains here. Not showing great price action recently, but, if it does form another base, I think, safe to call it just a second stage.
Great, that's awesome. So the other stock is Home Loan Servicing, HLSS.
Right.
And after what you've said, I'm looking at that first consolidation and a breakout, a nice run up to a second stage base with a breakout on January the 25th. Not a lot of volume, but the next week a nice volume shot came in. And I'm just curious if you think I got that right.
Yeah, I think you got it exactly right. And okay. This is one where, I'm expecting the markets to come back in a little more here. And there are a lot of charts out there right now that look like, a lot of weekly charts that look a lot like home loan servicing solutions. In other words, stocks that are too late to buy because they're extended past breakout areas. But right now, the line in the sand for home loan servicing is going to be that 10-week moving average just underneath 21. I think if this is a strong enough stock, which it's shown that it is. I would expect that 21 level, 2075, 21 to be a pretty good support area, and would expect the stock to find support there, and that could give you a little entry point. But I think your analysis in terms of the initial breakout and then a second base forms and it breaks out again. So you're in the very early stages of a consolidation here, and wouldn't be surprised to see a pullback to, again, that 2075, 21, and you could get a decent entry point, because that's going to basically coincide with its last breakout area, a pullback to the 10-week moving average.
Yeah. I sure appreciate it, Ken. Sometimes it can be confusing because there seems to be a lot of different interpretations.
Well, and that's definitely true with technical analysis. Sometimes it's definitely not black and white, but the rules that I follow and the rules that IBD teaches, there's a pretty good foundation of rules there. But that doesn't mean that some charts can't be interpreted slightly differently. No question about that.
Great. I sure appreciate your opinion, and I look forward to your show next week.
All right. Thanks. You're very kind. Thanks so much for the comments. Appreciate it.
Bye-bye.
Bye. All right, Jay from Vancouver, British Columbia. So this home loan servicing solutions, very strong stock. It's another one of these mortgage servicers. You've got the Nation Star Mortgage Holdings. You've got the Walter Investment Management, Aquin Financial. Pretty bright growth prospects for stocks in this group. And HLSS, again, get a little bit of a market pullback. You could see it, come back down to its last breakout area, which, again, is going to be the last swing point was around 2050. It's a 10-week moving average at 2075. Thereabouts, so wouldn't be surprised to see it find support there. All right, taking a look at some other earnings reports. Let's take a look at SourceFire. SourceFire, another big move for the stock today on better than expected earnings. Fairly significant, not significant, but fairly high short interest in SourceFire ahead of our earnings. So a lot of shorts probably running for cover today. This is a stock that clearly has suffered a lot of technical damage in recent months, but a nice gap up above what was likely to be a potential resistance area, but doesn't look to be the case. So SourceFire up 15% today to 48.57. Network security firm, their earnings of 29 cents were in line with expectations, up 16% from a year ago. Sales better than expected, up 27% to $67.4 million. The government is a big customer of SourceFire. There were concerns that government spending was going to be pulling back, but that revenue was actually pretty good from the government. Their U.S. commercial revenue rose 17% to $104 million for the full year. International revenue rose 77% to $74.4 million. So SourceFire having a good day today. And then let's also take a look at ONXX. This is definitely a speculative biotech. They're not profitable yet. They work in the field of cancer. Last year, Onyx won approval for two drugs last year: Kyprolis for blood cancer, multiple myeloma, and Stivarga for advanced colorectal cancer. But Onyx making a big move off its lows today, up 10.5% to $77.25 on better than expected earnings. And then another headline stock here would be WBMD, WebMed Health Corporation. Big gap up for WebMed, up 26% today to $20.59. Better than expected sales here, and strong revenue guidance for 2013 from WebMD. So another stock with fairly high short interest, so probably some short covering here as well. We were just talking about Bloomin' Brands working on a second stage base here. The company came public in August at $11 a share. They did report earnings, so we'll just revisit Bloomin' Brands real quick. And price and volume trends, not all that great in the stock in recent weeks. Restaurants in general, outside of some of the more speculative, we'll take a look at another one in a second, but most of the larger, higher quality restaurant stocks been under a lot of pressure. Bloomin' Brands today breaks below its 50-day moving average, down 5.1% to 17.13. Their main restaurant is Outback Steakhouse. That's what they're mostly known for. And then they have other restaurants like Carrabba's Italian Grill, the Bonefish Grill, Fleming's Steakhouse, and Roy's. I remember eating at a Roy's in Maui. Very nice restaurant, excellent food, but stock's having a rough day today. Again, down 5.1% to 17.13. There's one restaurant that has been doing pretty good, and it is I think it's DFRG. We talked about it yesterday because they came out with earnings. One of the more speculative names in the restaurant group, but this is strong stock, and it's a recent base breakout that is still showing staying power. You can see the breakout earlier this month over 1650 thereabouts. The stock right now trading at 1775, down almost 3% on the day, but holding well above that last breakout area at 1650. It's a company called Del Frisco's Restaurant, and earnings yesterday showed sales up 13% to 80.9 million. One issue here is that sales growth has been decelerating in recent quarters. Earnings growth prospects look pretty good this year and next. But pretty high short interest in Del Frisco's as well. 421 million market cap. So it is speculative, but it is interesting to see some of the speculation that's been going on in this market. I think I mentioned on yesterday's show that Chipotle, Panera, some of the larger restaurant stocks that probably have more institutional following, those really haven't been going anywhere, and a lot of the lower market cap companies have been making big moves. So Del Frisco is definitely in that group. All right, want to take a look at just a couple of other earnings reports here. Let's check in on Flowserve. As its name would indicate, the company makes flow control products and services for the global infrastructure markets. Earnings here up 24% to $2.82 a share, and that was a little bit ahead of expectations. Revenue up 5% to $1.33 billion, also slightly better than expected. Company raised its dividend by about 16-17%, and it also is planning a 3-for-1 stock split subject to shareholder approval. Flowserve having a pretty solid day, up 3.6% to 161.45. Yet another example of a stock that's very extended here. Tough to buy after a huge price run already, where it really hasn't consolidated gains. You can see headed into today, it was down for 5 straight sessions. That is not a consolidation. That's just a pullback, and does not make the stock buyable after a pullback that short in nature. Bunch of retail earnings reports coming up. Nordstrom got things started last night, the upscale department store operator. The results weren't too bad, but the company lowballed its full-year guidance, or at least some analysts think the company is trying to under-promise and over-deliver here. The bottom line and top-line growth was decent. Sales up 13% to $3.7 billion, earnings up 26%. But full-year guidance came up short. The company continues to invest in its website, e-commerce operations, and it's also still in the process of major expansion of its Nordstrom Rack stores, discount clothing stores. So Nordstrom under a lot of pressure, down a little more than 1% to 53.94. Also in retail, Abercrombie, ANF. We heard from Abercrombie before the open today. Here's a stock that had been holding up pretty well, but has really been taken to the woodshed over the past 3 days. Wednesday, Thursday, down big. It is firmly underneath its 50-day moving average now, down 4.9% to 46.66. Nice bottom line beat, $2.21 a share. That was up 97% from a year ago. Sales a little bit short, up 11% to $1.47 billion. Fertilizer stocks under pressure today after Agrium took a hit on earnings. So you see Agrium really getting hit here, down 5.4% to 101.06. Other fertilizer stocks under a lot of selling pressure today. Mosaic working on 4 straight declines. $62 stock back on Tuesday. Now it's a $57 stock, and CF Industries also under a lot of pressure. Would avoid the fertilizers here. Some are saying they're oversold, but just a lot of technical damage done. Sellers are completely in control, it looks like, in the fertilizer space. Stocks that are interesting here, stocks that I think still have potential and are just acting very well technically. And Shutterfly, definitely put Shutterfly in this group. The stock is up 1.3% today to 41.59. Love how a stock gaps up and then just holds gains tightly, which is exactly what Shutterfly is doing. This is a photo sharing website. One of the main services Shutterfly offers is that they can turn digital photos into things like photo books and greeting cards. When you had this big gap up earlier this month, it was because of strong earnings report and also bullish sales guidance for 2013. So Shutterfly may not be done here, showing very strong technical action, and also have to respect Netflix here. A lot of people saying, Netflix gapped up, just not a stock I'm going to buy. I feel like I'm chasing it. That is true, but the fact is that it is. I think it's going to be a while before Netflix fills that gap from back over here. This is just a super strong stock, well supported, and it's trading at 179.25 right now, down 4% on the day, but still holding up very well and holding gains nicely. So Netflix looking pretty good here. And let's take a look at Cerner as well. I love how Cerner's holding on to gains here. These are all stocks to watch here. You can see Cerner made a nice move a couple of weeks ago, and it is just kind of holding gains after that breakout. Shares recently trading around 87.42. If it continues to move sideways like it's been doing the past couple of weeks, you could see a new entry point here. But again, I think the overall market environment right now is just not conducive to taking new positions, going long in certain growth stocks. By and large, the action in the market has weakened considerably. Very bearish days for the market on Wednesday and Thursday, and a low volume rebound today. So I'm just kind of content to stay patient here. Don't want to force the issue. When you start forcing the issue, feeling like you should be in the market, that's typically when you have to you cut losses unnecessarily short, and I don't want to do that. So I know that it's not a great environment right now to be making money in stocks. When my newsletter comes out next week, I suspect that the short watch list section is probably going to be a little bigger than it was last week. In fact, the crop of short candidates probably is a bigger crop than the stocks out there that are buyable right now. So not much has changed. A lot of extended stocks out there. Buying opportunities pretty scant according to the criteria I use, and seeing a lot of stocks in the early stages of possible pullbacks after many have been running higher for 6 or 7 weeks. So wouldn't be surprised to see the little bit more of a pullback here. So that was pretty much it on the stocks I have. Mindray Medical, company that's coming out with earnings on Monday. MR coming down to its 50-day moving average in mostly light volume. This is a China-based company that's not looking, overall too bad. They make patient monitoring, life support, diagnostic products, medical imaging systems, support at the 50-day moving average ahead of earnings on Monday. We'll be right back, folks. Stick with me.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. As always, let's check in on the markets here as we head into the close one more time. We've got the Dow up 104 points to 13,985. Getting close to that 14,000 level again. NASDAQ Composite up 27 points to 3159. S&P 500 up 11.5 points to 1514. Mentioned volume a couple times on the show today. Volume pretty heavy in the major averages on Thursday, the second straight day of institutional selling in the indices. Right now, NASDAQ volume tracking about 25% lower than the just over 2 billion shares that we saw on Thursday. NYSE volume about 22% lower than Thursday. Talking about some of these restaurant stocks, another recent new issue is going to be reporting earnings on Monday, and a stock with some fairly decent qualities. It is another one of these speculative restaurant names, but Chuy's is a Mexican restaurant. They operate Mexican restaurants in Texas and the southeastern area of the U.S. It came public in July last year at $13 a share, and Chuy's is trading at $28.07 right now. It is up 13 cents on the day. Kind of some wild price action recently. I wouldn't call its technical picture great ahead of earnings, but you see a couple days of heavy volume selling here. A pretty nasty reversal on February 8th. Was on this day right here, and then more downside the very next day on February 11th, the following Monday, but still holding above its 50-day moving average. This is a fast-growing restaurant, good growth prospects, high multiple stock, but another one of these companies that's getting a high multiple because of strong growth. Look for earnings of 15 cents a share. That would be up huge from 2 cents in the year-ago quarter. Revenues expected to come in at $46.7 million, nicely above the $33.3 million it did in the year-ago quarter. Also on Monday, we're going to hear from 3D Systems, DDD. We've been talking about this stock off and on during the week. 3D Systems underneath its 50-day moving average here. Stratasys industry group here has been below its 50-day moving average for much longer than 3D Systems, but numbers should be good. Look for another quarter of strong growth at 3D. Probably a stock that's ready to build a base here, and we'll see what the earnings look like on Monday. On Tuesday, we're going to hear from Home Depot. Remember, all the home builders really got whacked on Wednesday and Thursday, and Home Depot was not immune to that. It fell slightly below its 50-day moving average, closed below its 50-day moving average on Thursday. It is back above the line, kind of a low-volume rally, though, just like the broad market today. Home Depot up 1.7% to 65.46 ahead of its earnings report on Tuesday. We're also going to hear from Macy's and Saks, and also Priceline, PCLN. We're also going to hear from Priceline on Tuesday. And another stock holding above its 50-day moving average here. So there are a lot of other charts that look a lot worse than Priceline's in the growth stock universe that I follow. And I always say about Priceline, this is a big company. I think its market cap is something like 34 billion. Something like that, but they continue to deliver excellent bottom line and top line growth quarter after quarter. So expect more good numbers from Priceline on Tuesday. More retailers next week: Target, TJX Companies, JCPenney, The Gap, Best Buy. All about retail for the next 2 or 3 weeks, folks. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in this week. Always appreciate it. I'll see you back here on Monday for another edition of Breakout Investing. Have a great weekend, everyone.